and kick on the video for that YouTube.
We'll get ready to rock and
And
roll.
the last thing, here we go. 3, 2, 1.
Welcome to another episode of
Business Bros!
Yay, ladies and gentlemen. Welcome to, I don't have a fabulous thing for Tuesday. You know?
Terrific Tuesday.
Terrific Tuesday works.
Totally Tubular Tuesday.
Oh, you're going Ninja Turtle style,
Yeah,
huh?
we got to throw it way back, you know. We got reminded
Way
of...
back.
Yeah, we got reminded a little bit this past weekend going to Captain Marvel, and it all takes place in the 90s, so definitely that was the height of Go Ninja, Go Ninja, Go.
Blockbuster time?
Heck yeah.
Vanilla Ice, right? We got that. Now, we did watch Captain Marvel. For those of you who have not seen it, great film. Go check it out. It's a good time, fun. I'm not going to do any spoiler alerts like I was talking about the movie yesterday on our conference
Disappointed
call.
on you.
Yeah, sorry. It slipped. No, I didn't slip. I was just talking about it before the meeting started.
Yeah, and you didn't mute it.
Anyways. Yeah, I didn't mute myself, so sorry. No spoiler alerts here.
Onward.
Onward. All right, let's start off with our friends. New friends for the week.
New friends for the week. Who do we got?
I can't say for the week. This is new friends since the last time we podcasted. So we got Anthony O'Connor. We got Karina Gutierrez, DJ's wife.
Oh, okay.
Congrats to them. I gave DJ a shout out last podcast for the flip that they closed.
Mm-hmm.
So I got to make sure Karina gets a shout out too, because hey, she's part of the team, man.
You kidding me? Without her, where would he be?
Yeah, exactly. Lost.
Where would any of us be, right?
Right. All right. So then we got Jeff Fenster. We got Fahad Hamil. We got Dory Dickinson Stutz. I'm sorry if I misspoke that one. Stutz.
Not as easy as Lopez.
Not as easy as Lopez, right? Christina Ramirez. We got David Kim, Jay Lee, and E. Christopher. So those are the new friends for the show. Thanks again, guys. By the way, if any of you guys want to make get a shout out on the show, close a transaction because we're about to do the sold ones. So close some deals, and then we'll be out here giving you a shout out. Sending recognition where recognition needs to go. All you got to do is hashtag Business Bros, and we're on it. All right,
perfect.
So sold. Man, I gotta clear my throat.
Let me clear my throat.
Sorry. What? Yeah. Sorry. One of those weird days. All right, so just sold. So we have David Mercado sold a property. By the way, I gave a shout out to David. He used to work with me at H&R Block way back when, 2006 time, somewhere around there. So he's still in real estate, still closing deals. He's just closed a recent transaction. Congrats out to you guys. And then we got, actually, this is not a closed transaction, but still impressive nonetheless. The greatest salesman in the world, Mr. Pancho Lopez.
Uh-huh.
Not one, not two, but 3 escrows open today.
4. The fourth one came in. I don't know if you noticed it.
I didn't.
He edited that post, and the fourth one came in. Mr. Jose Valencia dropped that fourth one.
Ooh,
boom.
Jose, too.
You know what? Another big shout out to the fearless agent, Mr. Jonathan Fisher, made the top 10 producers at Big Block.
So did Tim Barker.
Oh, snap.
So did Mr. Fearless Agent over here. We got a couple of them on that list. So
I love it, dude.
You guys just keep crushing it out there. Keep doing what you're doing. We love it. We appreciate it. We're glad you guys been on the show. And we want to make sure we continue to show support. So keep doing it out there. Hashtag Business Bros. And we give you the shout outs when we see them. So put it out there. Make yourself known. All right. You ready to jump into today's topic?
Let's do it. What were we talking about today?
I forgot what we said we were going to talk about.
Well, we had a couple of different things. We were just throwing out ideas. We were like consumer debt. We were talking about giving back. And then we started talking about taxes.
Oh, that's the big
differences between LLC and S Corp, C Corp.
Because I spent the last couple hours, by the way, finishing up some LLC returns, finishing up some 1120S's, which is S Corp returns. Because the filing deadline for those of you who have entities is on March 15th, which is T-minus 3 days away.
Yikes.
So you got to do one of two things. You either got to file the return or file the extension. One of those two things needs to happen. And just so you guys are aware, like even if you file an extension, the extension is really just a paperwork extension. It doesn't stop the payment from being due. The payment is still due on the 15th, whether you owe the franchise tax board the $800 for the entity, or you have a tax payment due on a personal level on the April 15th, for example, deadline. If you still owe the IRS at that point and you haven't paid the bill by April 15th, or in the entity's case by March 15th, then you start incurring interest because you have a balance due. So you got to make sure you pay that by April 15th or file the extension, but the payment is still due. The paperwork we can file later, but the payment is still due. So make sure you guys get out there and get that done ASAP. And if you need a tax preparer, hit me up. I know a great network of some pretty awesome preparers, enrolled agents, CPAs, either way you want to work with. I got some great people that I know that can help you get stuff done, and maybe you can build a good relationship and get those returns on a regular basis. So let me know, Hernan at csfirst.com or 619-884-4915, and I can refer you and get you some help filing those tax returns in a timely manner. All right?
Of course, with somebody that you trust.
Of course, with somebody that you trust. Somebody who's, by the way, who's knowledgeable, who's been doing it for a while, who has experience, and, is going to get you where you need to do on a bit. But, by the way, when it comes to taxes, this is something that I talk to my students all the time. You should have a general idea how your tax return works. I mean, just in general, and whether it's a corporate return or whether it's a personal return, you should have an idea how it works. If you're just the type of person who kind of puts all the documents in an envelope and just ships them off to a tax preparer to do your tax return, that's kind of you're screwing yourself, essentially. I don't know how else to say it. I was trying to say it in a nice way. You're messing it up. Think about this. Look, a preparer really is only as good. They're only good if they can find you deductions, and the deduction is going to come based on your situation. You as a professional should have a good idea and a good understanding what things in your industry are deductible, not deductible, or at least have these questions to ask. What credits you might qualify for versus what deductions you might qualify for, different things that are going on in your business or in your personal life that you should be aware of, because when you ask these important questions, when you inquire about this sort of stuff, it's when it's going to open the door for a new possible opportunity. Yeah, your tax preparer asks some questions, but oftentimes they're pretty general questions. And when you've been seeing a tax preparer over and over, the common theme that you get from clients as a tax preparer, by the way, is everything's the same as last year. That's not always the case. Things happen in your life, and you need to make sure that those things get addressed. You ultimately are responsible for your tax return. There's a little line at the bottom where you sign the return saying that the return was prepared based on the information that you provided. I mean, that you've read the return, that you understand the numbers that are on it. So you are ultimately responsible for what goes on it. You could have a bad tax preparer that, does some funky stuff, but you're still signing the return. So let's say, you do get an audit letter that comes back to you, and, there's something wrong on your return and it's legitimately wrong. And, your tax preparer made the mistake, for example. Could the taxpayer get in trouble? Sure, but the tax and the penalties and the interest are ultimately your responsibility since you signed the return. So yeah, that taxpayer can get in trouble, but it's still your responsibility. So you want to make sure that you know what's going on, that you're not just shooting after that high refund, right? And understand what a refund is. Ooh, sorry, I'm going on a tax rant.
No, it's cool. It's cool. I mean, the refund really is that you paid too much. Right. And so we've talked about this in the past, where one of the ways where you can increase your monthly income is to make sure that your deductions are right on your W-2 or whatever earning statement that you have. W-2 or W-4?
So the W-4.
W-4, yeah. W-2 is the other one.
Right. The W-4 adjusts your federal withholding on the federal level. So, for example, if you're the type of person who gets a really large refund every year, you can adjust your W-4 so that the government withholds less on your paycheck and more goes to withholds less and pays to the government that portion and gives you more in your paycheck. So it's an adjustment you can make if you fill out the W-4 correctly, which it's actually a little booklet, and I think it's like 19 pages long actually. But if you fill it out correctly, the idea behind it is that you actually have zero refund or very little refund, or owe just a little bit or get just a little bit back, so that you're maximizing the amount of money that you're keeping in your paycheck. So that's really what it's designed for. And there's a lot of people, when these new tax laws changed, they didn't go in and adjust their W-4s. Here's the other thing that's a common misconception about a W-4. When you fill it out, it gives you the option. It says, are you married or are you single? Right? Or are you head of household, or whatever your filing status is. Just because you are married doesn't mean you have to withhold as a married individual. So it's different from the W-4. This is how much is going to be withheld from your paycheck. So if you're the type of person who has a hard time saving, for example, or you want to have a larger refund at the end of the year for whatever reason, whether or not it's a good investment, not bad investment, is a different conversation altogether. This is just, do you want a refund at the end of the year? And if you do, then maybe you want, even though you're married, maybe you want to be withheld as a single individual so that you have more money being taken out of your paycheck and you get a larger refund at the end of the year. So those allowance numbers are, the higher the allowance number, the less they're going to withhold, and then the smaller your refund's going to be. So, talk to your tax preparer, sit down and ask these questions, because filling out a W-4 is different than filling out your 1040, for example. So I know W-2, W-4, they're really close. They're similar. They have the same letters. They have to do with work and your money, whatever. But again, if you don't know what's going on, these are the questions that you want to ask your tax preparer, because they assume you know what the heck you're talking about when you bring them their forms. So you have to be able to ask these questions and preemptively ask these questions. So
that's perfect. I'm not a tax person. I'm a tax dummy. I have to file them every year, but for years have just been bringing them to you. So what are some questions? I mean, I walk into the tax preparer's office. I have a regular 9 to 5, or maybe I'm a real estate agent, and so, I'm 1099, right? So what are some questions that I should be walking in there asking? What should I be thinking about?
I'm going to give you the typical tax answer. You ready?
Let's do it.
It depends.
That is pretty much
the typical answer, right?
Yeah, it is. Yeah.
But it really depends on what goes on in your particular life. Mm-hmm. And I always said that when I started preparing taxes, what I found out really quickly was that it's therapy / prepare your tax return.
Right, yeah, because they're always coming to you and telling you all of their problems and everything that's happened over the past year, everything that's changed. But got a divorce, my dog died, truck broke down,
all that stuff.
I listen to country music,
right? Yeah, you can tell. but that's where that story about what's happening in that year allows me to dig a little deeper and ask some more questions, and pull out. Oh, you got a kid who started college this year. Okay, well, let's take a look at, are you paying the tuition? Did he get a loan? Did he get a scholarship? How are you paying for this certain things? Oh, you know what? Your dependent. Your parent dependent passed away. Okay, well, let's see how it affects, your exemptions, even though those kind of disappeared this year, right? So there's a bunch of different things that happen. The best thing you can do is be very descriptive with what's going on in your personal life with your tax preparer. By doing that, they should be able to open some doors, and you should always come in with some questions on, did I get enough? Am I itemizing? Question number 1 now, because the tax laws changed and there's a lot of people who used to itemize that aren't itemizing anymore. Right. And then another thing is, if you are itemizing, then you want to ask about the different itemized deductions. And there's a bunch of different categories that we can talk about. You can talk about mortgage interest, how things changed in the mortgage interest deduction. You can talk about state and local taxes, the taxes that you already pay. That also has a different change. And the medical expenses, people think they can write off all their medical expenses and don't understand that there's actually a floor that starts off. So maybe you spend a lot of medical expenses, but maybe none of it's deductible. There's a lot of different sections that you want to make sure you understand. And the best thing is to always ask for a review of your tax return. So at the very least, a
review of your last year, or
well, you know what? That would be a good start, to review last year's return at the beginning, and then go over once the return is prepared, have the tax preparer go over it line by line so that you understand what's going on, because it flows. It's a pretty simple system when it comes in. You put your information on the return, we calculate your income, we make some adjustments. We have we calculate the tax, and then, whether we itemize or not, we calculate the tax, and then we calculate the payments, and we see whether you have a refund or not. So you should have a good flow of how things, work together, and get a general idea of what deductions are you taking and what helped you, what didn't help you. So you get, so you have an understanding. Am I suggesting that you become a tax pro? No, but you should at least have a general idea of how these things work, just so you are aware.
We may or may not have had this conversation before, but it did come up in conversation for me at some point. So why would somebody choose an S Corp over an LLC, or vice versa, for tax purposes?
For tax purposes,
it depends.
It always depends. I think the better question is, when should I incorporate or not? You know what I mean? When should I start as an LLC? When should I start an S Corp? And this is going to be one of those debates depending on which financial professional you talk to. Some of them are going to say you should start off by incorporating right off the bat, right? And some people say, well, you incorporate for tax purposes. And there's truth to all those things. In my opinion, though, however, I think the first and foremost part of your business is to learn to go out and make business. The second part is what kind of liability exposure do you have? Right? What do you have at risk if you go out and do business? Whether if
your home, if you're a homeowner,
right. So
whatever assets that you have.
So think about that. So you have your cars, you have your home, right? You have your whatever it is, whatever assets that you have, right, are at risk. So a liability company, whether it's an S Corp, whether it's a C Corp, whether it's an LLC, you're limiting the liability that you have to those types of assets. So you create this separate entity so that when you do go out and do business as this entity, if something happens, only that entity is at risk. It's kind of like creating a clone of yourself. Right. And so your clone is the one who's going out and doing the work. And if that clone messes something up, it's going to be responsible for all that stuff, not you.
The clone gets in trouble.
The clone gets in trouble, right? The entity gets in trouble, or the entity gets sued, or whatever it is. It's a way of protecting yourself. But setting up an entity could be expensive.
Well, if I'm, say, just a real estate agent, you know, I'm part of a brokerage, or maybe I'm an owner of a brokerage. In which situation should I have an LLC or an S Corp?
Well, let's look at the cost, for example, right? So let's think about
$800 a year, right?
It's $800 a year. Well, it's $800 a year if you're being treated as an S Corp or as an S Corp or an LLC, right? So yeah, there's an $800 a year fee whether or not you pay any taxes at all, because those are pass through entities, right? The C Corp is not, but the S Corp and the LLC are pass through entities, so they're gonna have that fee that they pay the state every year, right? Well, what can you get insurance wise for $800 a year? And if you're thinking about it as a real estate agent, maybe it's a little bit cheaper to get an umbrella policy, you know, to cover your assets.
I mean, you're talking about E&O.
You're talking about E&O, right? But E&O sometimes is covered by your brokerage.
Sorry, those of you who are not
errors and omissions.
Errors and omissions, which is protection for a real estate agent who might make a mistake somewhere.
Yeah, you might say something wrong, or you might type out something wrong, whatever it is, right? Errors and omissions insurance. But sometimes that's covered on a per transaction deal, right, through your brokerage. So maybe that's not even a cost that the agent has themselves.
Right.
So maybe you get an additional umbrella, or maybe you get some additional protection as an insurance product, and maybe that's only costing you $400 or $500 a year, right? If that's a cheaper option, then what's the difference in coming in and doing it that way? Now, once you start making more money and you start having additional assets, like maybe you are renting more space, or you're going to buy a space, or you're going to do some flips in properties, and you have a little bit more exposure, the income generated is much better, then you might start looking at incorporating. But it's not something you have to do right off the bat. And not that you can't, I just don't always think it's the right move right off the bat, especially when you're starting a company and capital is an issue.
So we're talking about liability protection. That's definitely one of the reasons why we would create an LLC, either one. What about tax protection? Are there tax advantages to being an S Corp or a LLC?
Well, yeah, there's definitely, especially with, you know, new tax laws that have passed, some of those 20% right off the top type credits and stuff that you get for a regular entity is really nice now in newer tax years. But in the past, I mean, there's a lot of the way the tax law works is a little bit nicer with the pass through, because of you're not paying things like self-employment tax on parts of your income. So let's give you an example. So let's say a real estate agent made $100,000, right? If an agent made $100,000 and they're a sole proprietor, right? We're going to take that $100,000. We're going to subtract all the expenses in the production of that income. So let's say we get it down to like $50,000 or something after we pay all our realtor fees, marketing fees, all the other things that we spent. So on that $50,000, we're going to pay a 15.3% self-employment tax, right? On like 92 and something percentage of that income. Anyways, so it's about 15.3% self-employment tax, which is our portion of Social Security and Medicare, right? And then after that, we're going to pay income tax on it. So that's kind of, almost like a double tax, but it's basically what an employee would be paying anyways. It's just we're paying it at the end instead of paying it throughout as we earned it. Okay, so that's as a self-employed person. Now let's look at an entity, for example, a pass-through entity like an S Corp or an LLC. Now, when you make that same 100,000, we're going to deduct that same 50 grand, right? Because the expenses don't change; they're about the same for both of them. But instead of paying self-employment tax on the whole 50,000 in net profit, maybe we pay ourselves a salary for 25,000 for the year. We pay the Social Security Medicare tax on that, which is the 15.3%, and then the other 25 just passes through and doesn't get taxed at the self-employment rate, doesn't get taxed the Social Security Medicare. So we're saving ourselves a chunk on that stuff.
Where does that $25,000 get taxed? Because Uncle Sam ain't going to let you have that for free.
No, it doesn't get hit with self-employment tax. You still pay income tax on it.
Okay.
You're still going to pay income tax on it, but you're saving yourself that part of the self-employment tax. So
got it.
So there's definitely benefits.
Going back just a little bit, how much is the self-employment tax?
15.3%.
And that's the same that you would pay by paying yourself that salary, that $25,000.
Yeah, because
But the other $25,000 doesn't get hit with the self-employment. You don't have to pay the Social Security, Medicare. You only pay the income tax.
Right, it's a pass through on it.
Okay.
So, and then when you're talking about, we can get totally different if you're going to end up doing a C Corp, because then you have double taxation over there. But that's just kind of a vague general idea of how the difference between being a sole prop and being an S Corp works. Now, I don't, it always, again, it depends. What if you're not making that much money? Is it even worth it at that point to even have the pass through versus, having the salary? Or then on top of that, you have the $800 a year for the franchise tax board. So there's a bunch of different scenarios that could happen. But the idea is, talk to your tax preparer about your particular situation. And this is one of the questions that you want to be able to ask, right? Am I ready to incorporate? Should I incorporate? Mm-hmm. Do I make enough money where it's like a logical step? Where am I going? Where am I at today? And where do I plan to be in the next 5, 6, 7, 10 years, whatever it is? Mm-hmm. And then, what is my growth plan?
Well, really, I think that when you go to talk to your tax professional, having that 6 to 10 year goal or vision is important.
1 to 2
But I was going to say 1 year. Like, where am I going to be in the next year? And is it smart for me to take that step and incorporate today? Yeah. Like, is that going to benefit me for where I am next year? Because where I am 5 years from now, it doesn't really change whether I incorporate today.
Right.
And where am I going to be next year?
And then even then, there's a whole different conversation that you can have depending on what your plan is going forward, right? So let's say, for example, that later down the road, right now I'm a real estate agent and I'm doing, I'm putting money aside because I want to do some investments, but I want to get to the point where I have a nice credit line for my corporation, right? Well, if that's the goal, if your goal is to get, an increased credit line, so maybe you can do flips, for example, right? Well, then you're going to want to establish your entity earlier. And you're
because it takes at least 2 years for the entity to build credit, or
more, depending on how profitable you are. Depending on are you building a credit line? Basically, it's like an infant being born. So you don't have any credit history. You don't have anything like that. So the longer your entity exists, the more tax returns it has, the more credit history it has, the better credit rating it's going to get, and the more likely you are to get larger lines of credits directly to the corporation. Because that's a big mistake that we made. In our very first corporation, we got the concept of the limited liability, right? We've got the concept of the taxes being different. We started a company, we incorporated, everything was good. The problem was I was personally signing for debt, thinking that the corporation was signing. And that was a big, cluster when it finally went down, years later. So understanding those types of things, what's the difference between personally signing and your corporation actually signing? Because it might say your corporation's name on the dotted line, but read the fine print. Are you personally signing, or is this an entity line of credit? And if that's something that you have down the road, then it makes sense to incorporate on day one, because you actually have a growth plan. You have a target that you want to get to, and we actually got a guy that's going to be coming in. I don't even know which one it was. I didn't write it on there, but on the calendar, that's going to be talking about building business credit, and that's going to be a great conversation because I want to know.
I see it. 3rd.
There you go.
April 3rd.
Nope, that's actually April 9th.
Oh, all right.
But April 9th, yeah. So he's going to be coming in. We're going to be talking about how to build credit for your entities. And that's kind of a cool thing because, the thing about having a line of credit is you may not need it right now, but as an entity, there might be a point in the future where you do. And if you're ever in the position that you need to borrow, that's usually when the bank's not giving you the money.
That's true.
Right? So you want to make sure you plan ahead of time, especially if you're going to scale and grow into, whatever it is that you're going to grow to, whatever your plan is. So, having that thought, that forward thinking and setting up your entity ahead of time is one of those reasons why you might want to do that. But again, that's different from just creating an entity because I'm starting, just because it's a tax advantage, right? I always say the same thing when people ask me, well, is it beneficial for me tax wise to do this? Don't do things because of the tax benefit. Do things because you're going to earn more money. Do things because you're going to get better financially, but do them in a tax advantaged way. Mm-hmm. Right? That's the best way. Don't do things because it's a tax write-off. I blows my mind, but some people have this mentality in their head where I say, this is tax deductible, and they think in their mind they hear free. Right? Tax deductible does not mean free. It means you still paid for the thing. You're just not going to pay the taxes on the money that you spent.
Right.
But it still requires you to spend the money for it to be a deduction. And that's why I think one of those things in people, young entrepreneurs anyways, that they tend to, I'm going to buy the cars tax free anyways. And they hear the word free and they think free. It doesn't quite click that they've still acquired a debt that they got to pay for, right? And so, or an expense that they had to pay for, and it's affecting their bottom line. I mean, your business, you should always focus on your bottom line. Are you in the black? Are you in the red? You should stay in the black and increase that number as big as you can. But we're going to do it in a tax advantaged way.
We should write that down as one of the topics to talk about with Melina. Like, why is it people think tax-free and they just think it's free?
Yeah, because it's tax deductible means it's free. No, it doesn't.
Where's the behavioral economics behind that?
Right? And Melina's going to be here we're going to talk to her on Monday.
That's cool. Awesome. So lots to look forward to for everybody who's paying attention. We do have Melina Palmer, the host of the Brainy Business Podcast. We've talked about her many a time, and if you have not gone over to check out her podcast, highly recommend that you do that after you're done listening to this one, of course. We talked about Ty Crandall, who's going to talk about improving your business's credit. Wesley Dwayne from Rideshare TV. That sounds like fun.
We got a bunch of different ones. We're going to be talking to
Alin from Neat Underground.
From Neat Underground. That's a restaurant in IB.
Yep.
We're going to be talking to Ernesto pretty soon here. We're going to
Barrio Dogs.
From Barrio Dogs.
We're probably going to visit them on Sunday, by the way.
Yep. And we got another one. What's the under Melina's name right there? Oh, Joseph from Vineyard Haciendas. Event planning. I mean, all kinds of pretty neat businesses that are out there that can help, maybe cater some events for you guys that are in real estate out there. Maybe you want to build your entity's credit. Maybe you want to do, restructure your branding so that it has, some dynamic in that it increases your conversion ratio, whatever it's going to be. All these different types of content that we want to bring to the table to help you guys be better business owners, because that's really what it is at the end of the game. At the end of the day, it doesn't matter what industry you're listening from, whether you're in insurance, whether you're real estate, whether you're in anything else. It's sales, baby.
It's all sales.
It's all sales. It's all the bottom line. It's all about being of service to others and bringing as much value as you possibly can so that your bottom line increases at the end of the day.
There you go.
The better you can be of service to other people, the better you're going to be in business.
There you go. So speaking of being in service to other people, bring this up again. 365 pairs of shoes by the end of the year. I actually got my first donation yesterday.
Wow.
Yeah, the show hasn't even aired and I already got a donation.
Nice. That's pretty damn good.
So there's one. Also, big shout out to Sylvia, right? Sylvia Vasquez, who, did something. You guys can check out on her Facebook story everything that she did. But along the same lines, giving to those who are less fortunate. So big ups to her.
Right. And, big shout out to the old man for his pie creed, because really that's where the inspiration came from for us to be doing this. So those of you on Facebook, by the way, it's kind of new to you guys because you haven't heard the podcast that we recorded yesterday that will come out tomorrow. I know it's all twisted.
Yeah.
Time paradox. Right, but
anyways,
right.
it will all be explained in Endgame.
Yes, exactly. So anyways, my dad has this thing about the personal integrity creed. He wants it to be focused on helping homeless people, right? Specifically veterans, right?
Well, that was my
that yours
input
was
on it. Yeah, that was my input on it. Specifically veterans with PTSD.
But Dad wants to help as many homeless people as possible, part of the pie creed, and he has a little bookmark. So maybe what we'll start doing is we'll be giving away the bookmarks for maybe some donations for this stuff. I don't know. We'll see if we can set something up. And basically what we want to do, we want to create a place where we can have donations, 365 pairs of shoes.
By the end of the year.
By the end of the year to give away.
That's it.
Are we giving them away around December time? Is that the plan?
No, honestly, I don't even. If somebody gives me some shoes, I'm gonna go walk around Balboa Park. I'm gonna find a homeless person. I'm gonna hand them right off.
Sweet. So, let us know. We're definitely something we want to do. James at csfirst.com is the best way to get a hold of him, and he'll definitely tread over there.
I'll make my way over.
Right, tread over, or we'll figure out a place where we can put these things together and start, giving back.
Hey,
to
man,
the community
there's
a little bit.
plenty of spaces to go. If you head down into right outside of East Village in San Diego, it's like 16th Street, Tent City. There's plenty to plenty of people who need help.
That's right. So make sure you guys, if you guys have any questions, by the way, or you're interested in being part of the podcast, or somebody who has a killer business or a great idea that they want to be, they want to put out into the Twitter sphere, is what we call it.
I guess.
Internet.
Interwebs.
Oh, the interwebs is what you call it. The interwebs. Hit us up, Hernan at csfirst.com. My telephone number is 619-884-4915. Or for all your insurance needs, James at csfirst, 619-884-0045. And, of course, our social media feed at Business Bros Pod. That's all we got for you guys today. Peace.
Bye-bye.
And I'm out. Thanks, Facebook. We love you. I hope the tax thing wasn't too boring. It's just there's a lot of stuff going on. Very informational. Very content heavy. Yeah, very content heavy.
It wasn't as like woo fun, like
But when is taxes really woo?
I mean, I guess it depends. But you might say the same thing about insurance. But I get super pumped about insurance.
That's true. All right. Well, if you guys have any tax questions, shoot me an email. If you guys need a tax preparer, let me know. I'll hook you up with a couple that I know. They're great guys and gals.
Yeah, I was gonna say.
Yeah, I got a good network of them. So let me know.
All right. See you, Facebook. Love you.
Bye, guys. Oh.